This week has been news after news after news when it comes to institutional capital moving into the space of Bitcoin and also crypto as a whole. Obviously, Bitcoin dominance starting to skyrocket now for the first time above 50%. So we're going to break all this down for you guys. What does this mean for Bitcoin? What does this mean for crypto? And maybe what does this mean for digital assets, central bank digital currency? We'll try to decode all of that for you guys today. My name is Paul Barrow. Welcome back into Tech Path. Let's get into it. Of course, thanking our sponsor, and that is Capital. If you're looking at long-term holding for your Bitcoin or other digital assets, one of the best ways to do that is in an IRA. And of course, long-term IRAs, you can do a couple of things. You can start a new one. You can roll over a 401 that you might already had or a 403. All that's available out there on Capital. Cool thing here, low fees, no monthly fees, and you can get a $100 funding reward when you use our link down below. So just use that. And it does help the channel out. Let's kind of just kick off with this first. This coming in from Coin Bureau over there, the guy at the guys. And that is Bitcoin dominance now breaking all-time highs, hitting the 50% mark for the first time in 2 years. Are we in the bull market is my question. Is this kind of scenario playing out? Is this something that maybe we, timing-wise, has started to line up for the next halving and some other things that could really start to play into this? If you look at some of the things that have happened this week with BlackRock, the potential here with Fidelity, and then, obviously what we'll be talking about today with EDX, there's a lot in the wings here, meaning all this stuff has been planned for quite some time. Ironic that we're starting to see some things happen around what Gensler has been doing here recently. 4 things that can spark the next bull run and bull cycle. A couple of things here. Previous 3 Bitcoin halvings, if you look back all the way to 2012, have all preceded massive Bitcoin price rallies and new, all-time highs. So that's pretty straightforward. Market also will be most likely in accumulation zone until the halving. I don't know. Are you guys in agreement with that? We saw Bitcoin inch back up to 30K. Could we see it start to move above those kinds of markers during this period of time? Or do we still have enough macro pressure and things happening that are uncertain in the regulatory space that could keep it down? Love to know your inputs. Make sure and drop some comments over on the side chat. We'll try to get to those on some questions today. And also, take a minute. Maybe you're new to the channel. Just first thing, welcome you in. Just hit that little like button right down there below. If you like these breakdowns on the markets, on a lot of the news, but also how Bitcoin and some of these assets can play out, make sure and let us know. Just crash that like button and it helps out a lot. A couple of points here I wanted to get into. This was interesting from Wall Street Silver. So many things leading over to BlackRock, especially as they push their ESG policies. If you don't know what that is, that's environmental sustainable governance. It's something that Larry Fink is very big on, and pretty much is, I would say, one of the cornerstones of BlackRock's mission statement. And they've got a lot of ties into a lot of different companies that at some point, could we see some tie-ins here with the overall crypto mission if BlackRock indeed does get the ETF succession moving in? Here was Adam Cochran stating that globally there's 60 trillion in pension funds, 250 trillion in private retirement savings. That's 300 trillion right there. Funds are put around 3% of that amount into gold and about 20% into alternative assets, so 23%. Crypto has about a 1 to 0.12 ratio right now in cash. Now, I don't necessarily agree with this number, but if only 0.5% of the 23% that he's talking about went into crypto, I don't think this is a 15x, but it definitely is at least a multi. We could see definitely a doubling starting to occur with these kinds of numbers. Remember, gold is an 11 to $12 trillion asset class. That's still a big market. That was 3% going into that market. So you have to remember 3% of the 12 trillion is kind of what he's putting together here in terms of the potential of what this might look like in the long term. Deutsche Bank also is now seeking crypto custody license approval. They seem to have come out of the fire in Germany and have stabilized, and now they're going after a crypto custody license. So this, again, will be approved by the EU and most likely MiCA. A lot of things happening there. Obviously, MiCA continues its trek of pushing a lot. We just did a video that we're going to drop later today on what's happening in the metaverse world. And a lot of you guys are probably saying, well, what's that got to do with Bitcoin and altcoins and all that? There are some interesting technologies that are starting to take place, and I think there will be a lot of projects that we'll probably have to do some videos on to kind of talk about those, because in the past we've done those videos in the past, kind of these real edge case portfolios that could be in 10, 15, 20, 100x kind of numbers, which is where I think the market's going to be going. Breaking after BlackRock filing for the spot ETF, rumoring the same. Now Deutsche Bank, of course, saw that. And this is a good statement here, I think, that Michael made, and that is, we're at the 1997-98. I say this all the time because that was the era in which I joined the technology company, which was known as Microsoft. And we were so smart, we thought, we basically said the internet was a fad. Mr. Bill Gates himself said that. That's no lie. He's on record saying that. Point being is that there's a lot of innovation ahead of us. We are, and I hear this all the time, you're early, but really, guys, we are early. The difference is now I think we are getting to the stage where the majors are starting to step in. And it feels like this has been something that's been coiling up for quite some time. If you look at what Preston Pish said, he says, I'm sorry, but after watching BlackRock, Fidelity, Citadel, Schwab, and now Deutsche Bank all apply for Bitcoin ETFs and spot exchanges, especially after the SEC just dropped a TRO on Binance and sues Coinbase, how can you not think this past year was not basically a setup? And I think that's the big one that kind of plays into this. So big situation overall. Anyway, we're looking at this as it goes. One of the things that will happen here, I think, too, this was an article in from The Block. Charles Schwab, of course, Citadel-backed crypto exchange. We've reported on this extensively before. It was about, how long ago was that, guys? I think it was 9 months when we did the EDX story. But this was essentially what was happening. Let me kind of zoom in on this for you. EDX will offer trading in 4 cryptocurrencies: Bitcoin, Ether, Litecoin, and Bitcoin Cash. Along with that, the exchange was the first revealed in September. Back then, we saw, seeking to cater to brokers and investors interested in digital assets, and will announce its official launch today. Now, why is this important? EDX said, I'll get to that in a second, EDX said it draws on traditional finance standards, but will operate as a non-custodial exchange and won't directly handle customers' digital assets. So I have opinions on both those things. Why is this important? First thing is this is starting to move into asset managers, meaning the typical asset managers who's managing securities, etc. People are asking about the capability of getting into Bitcoin or Ethereum or etc. Problem is there hasn't been a way to do that outside ETFs, which don't exist yet. Outside of Fidelity, which is a do-it-yourself product. EDX won't be. That's not really a retail product, but it's a retail financial advisor product, which now opens up a big zone of capital, much like what I just showed you in terms of where private funds and savings, and if you look at just the managed funds that are out there within a lot of these networks, this starts to really get very interesting because now another big pool is going to gain access. And of course, that's just like if you just think about what Fidelity's done with Bitcoin and ETH already. Imagine that in a state right now with EDX. This was the website. Right there are the assets that are going to be traded, Bitcoin, ETH, Litecoin, and Bitcoin Cash. Couple of things happening right now. You can go in trading days. This is just getting into, for most of you, this doesn't matter, but it does matter because it could raise not only the Bitcoin price, but the dominance of where Bitcoin is going. And not only that, the framework of how people, individual investors, start to look at this asset class. That's the bigger point that I think is very interesting because it starts to flow into market sentiment. As you guys know, we track tremendously on our Crypto Power Index how sentiment plays into this. And if you have been following us for the last couple of days, you've probably seen our sentiment inching up there on Bitcoin and Ethereum, and now Bitcoin approaching the 28K mark. We'll show some charts here in a second on that. One of the things, though, that is very interesting is this product right here. It's called Talos. Now, Talos essentially is the trading engine that runs or will run EDX. Now, this is important because it's tied into a lot of different companies that are connected to this. And that, to me, is one of the biggest things. And if you look at it, I was kind of zooming in on it. If you look at this, it's actually got access to all different asset classes in there. You can kind of see them right here. Now, it doesn't mean that EDX would eventually go to that, But it is possible that we would see digital assets maybe move into these categories or into these sectors in a big way. So that in itself is pretty interesting. Further into it, if you kind of just look at, who these guys are connected to, I think they had some stuff in here around their. Let's go down a little further. Here we go. Just some of the companies that are obviously tied into them. There's Abra, CoinFund. Quite a bit happening. And then, of course, the investors is what I'm really interested in. You have Wells Fargo right there, Citibank, Andreessen right there, Founders Fund. I mean, there's so many big key ones. And this goes back to when we covered EDX in the beginning. Remember, this was 3 banks, Citadel, Wells Fargo, Citibank, that were initiating EDX, so that this would initiate what? The ability for managers, fund managers, private investment funds, et cetera, private offices, et cetera, would have access to these new asset classes. So it's a big deal. And I think it could be a bigger deal because it starts to expand the ecosystem outside of retail. That's the bigger thing that we talk about. Institutional, always what we've been saying. When it comes in, well, guys, it's here. This is not all happening for no reason at all. This is not timing. This is a planned attack on how to get in at the basement, which is where we are right now. This is the full-on bear market, and it's a great place to enter. Let's get into a couple of things here on Talos, because to me, this gets into some very good detail of how Talos is going to be utilized. Listen into what they had to say.
Multi-dollar system, multi-dollar RFQ systems. We built DMA. We built, electronic connectivity. We built UIs. So really, like solving that vertical of if you want to trade crypto in an institutional way, you connect to Talos and you have the entire ecosystem. And then, about 2.5 years ago now, we started branching outwards and thinking not just about the trade, but also about the pre-trade and the post-trade aspect of the ecosystem. Because again, like we saw the demand there. We saw institutions coming in and saying like, okay, I mean, we understand the trading domain, but look, I mean, we have custody. Okay, we need access to custody and we need that side by side with our trading solution. Sometimes we have multiple custodians that we're using, right? So we built connectivity across multiple custodians. We built portfolio tools that our clients can now see all their assets. They can move all their assets across multiple custody solutions across exchanges. We built post-trade tools, so clearing, settlement, transaction cost analysis, and a variety of those. So really, today what we support and where we see the most demand is building these kind of like end-to-end trade lifecycle support systems. So the customer can come.
All right, so in short, what he means is this is the Bloomberg Terminal for investment and asset managers to be able to trade digital assets. That to me is a bombshell because it means that the framework is already in place. Now, this is not going to be something that, unfortunately, I think Coinbase maybe doesn't get obviously they'll get the retail business, they'll get the, some of the asset class itself, when you think about just custody side. But when you look at the actual transaction sides, and the thing that he was mentioning here in this video is the pre-trade and the post-trade data. That is the most critical data that asset managers are looking for. That's why Bloomberg Terminal, it's a very expensive platform, but they use this for securities. So it's a very similar application, and I think Talos is going to be one to watch. So guys, pay attention to what they're doing right there. Let me go into this next clip. This is a good one right here. Listen in.
Some of the next things that are coming up, those are obviously some of the logos of larger, financial institutions. Some of them are global, some of them are US domiciled that are interacting with crypto today. And it's safe to say that when you have these kind of organizations that are interacting with crypto, the environment is way more mature than it was 2 years ago, when it was 4 years ago. But where does that actually take the ecosystem, right? For us, what this means is that these kind of players are looking for a much wider tool set, right? So the couple of things that are coming up, we almost divide the world of institutional crypto adoption into these two zones. We're talking about the short term and the long term. On the short term, there's a couple of really known things that need to happen in order to facilitate further adoption of the institutions, right? Regulatory is number one. We've been fielding a lot of questions across all the domains that we work in around regulatory clarity. Obviously, the United States regulator is starting to push the envelope and actually start coming up with more clarity. But we're seeing this across the world, across EMEA, definitely across APAC and the lot of the MAS here. So these type of institutions, the largest ones that are providing traction and providing services to their clients, are looking for that kind of clarity, and that's starting to happen now.
All right, so starting to happen now. I just want you guys to remember this was 8 months ago. 8 months ago at Token 49. And you can see it right there. Citi, BlackRock, Wells, Morgan Stanley, Fidelity, BNY Mellon. I mean, that essentially is the financial institution inside the United States, which is why I feel like we have been in the second act of a play. And this is all theater. And theater is constructed by, these characters. Gensler is the jester, the court jester. Of course, Larry Fink has come in, and he's kind of the Robin Hood of it all. So it's going to be interesting how this all plays out. The big point of this is now we have something that I think maybe for the first time is a real step forward in the future of crypto and digital assets. Now, what is missing? Can anybody out there in the audience give me a clue here? What's missing? It's the regulatory framework. Now, why are we having all of these hearings just piling in on themselves? Just bam, bam, bam. Well, guess what? They're setting it up. This is how DC works their magic. If you call it magic, I call it manipulation. It's the greatness of being able to take from the rich and not give to the poor. They just give it to the other rich. So there's good and bad to this. The good is that this is good for crypto because it does mean that we're going to see a massive move in these markets. The bad is that we have to act much faster. When I say we, and that means retail. Retail investors have got to be on their ball much, much more than I think the rest of these industries. And now the good thing is that what we've done now over the past 12 years is created not only an infrastructure and an evangelist community, and obviously the different cults, we'll call them, out there that are Bitcoiners, ETH guys, the altcoins, the metaverse people. All of this I think is now coming together in one place. So very cool stuff. Now there are some spoilers here, so stick around for that one. And make sure and drop in some comments over there. We'll try to get some questions over there as well. Here it is, crypto exchange, EDX Markets, now backed by, of course, you guys know them. Drown the crypto natives exchange in lawsuits, generate fear around them, and then I'm not going to say that word because that's a bad word, but TradFi vultures and swoops in, and but do you guys, everybody that's watching our show, you pretty much have seen this coming, right? You know this has been coming for quite some time. It's just a matter of the structure in which it comes in. It's all a matter of how do you get to the bottom of the market, enter at the right time. Nobody's going to hit it right on the head, but the fact that BlackRock is going to move into this in a very interesting time, very, very critical. One problem is that I think retail is probably going to move this around a bit, meaning we're going to see some dominance start to really play out. And the players that are really going to be able to make that happen are going to be Coinbase and Binance. So this is why Coinbase and Binance were attacked. Binance, of course, right now working to integrate Bitcoin Lightning Network for deposits. Some eagle-eyed users spotted a new Lightning nodes recently, and yes, that's us. However, there's still more tech work to be done. This will be good because these are the good things that you're going to need for being able to increase a lot of these transaction capabilities, which we know are some of the issues out there. All right. We got a lot going on here, guys, today. Bitcoin, I think, just hit 28K too, as the Crypto Pit is telling me. Gold and Bitcoin, the perfect portfolio combination. I like this one as well. And, diversification is always a good thing. One thing I am starting to do, though, and you guys heard me say this a little bit, is I'm starting to analyze and look at the opportunities that are setting up for the altcoins. I know that everybody's focused on Bitcoin and ETH right now, but I think there's going to be some altcoin plays that start to make moves here. And whether it does it right at this moment or after Bitcoin gets a push is the key factor. The other thing that plays into this is this whole area around Web3 and what we will see in terms of this technology invasion. Now, when you think about invasion, I can only think of one other thing, and that is the IMF, which is now advancing a global central bank digital currency platform. Interesting timing as ETFs come into play, people get comfortable in the institutional classes, banks start moving in. All of a sudden, everybody's playing the same game and in the same sandbox with somewhat of the same framework. Only difference is that you have the IMF come in and say, wait, we might want to do something here. So this, of course, headline, is Ripple the hidden link to the IMF's global CBDC platform? This is a question mark. A couple of things that hit on this is the exploring Ripple's role in CBDC reduction of costs. This is interesting to me. I'm not really a fan of this kind of scenario. And as you guys will see, and I'll show you some stuff here on CBDC and what this really means, because there's a lot of things happening around the world right now. If you saw the Oslo summit, a lot of this was being tracked within that in the Freedom Summit in Oslo. This is where I think we as an industry need to start to come together and make sure that our lawmakers understand what we want in terms of digital asset freedom and the ability to be able to do these kind of things, because this is something that's coming, people, and it's coming in a big way. Here was a good example. This is Nick Anthony over at where is he? He's a Cato Institute. First phase of the HRF CBDC tracker is now live. He just announced this at the Oslo Freedom Forum. This is good because it was kind of interesting. I'll just show you the Freedom Forum. This was all going on at the IMF, and I'll show you some other things too. This came over from Altcoins Daily, so kudos to the twins out there for catching this. Let me play this little clip from their video the other day. Listen in.
The third way we think CBDC can improve financial inclusion is through what we call programmability. That is, CBDC can allow government agencies and private sector players to program, to create smart contract, to allow targeted policy functions. For example, welfare payment. For example, consumption coupon. For example, food stamp. By programming CBDC, those money can be precisely targeted for what kind of people can own and what kind of use this money can be utilized.
All right, so that should scare the living daylights out of you. Programmable money, what they're talking about are government assistance programs. But listen, if it starts there, it starts to move up the cycle. And it starts to move into everyday lives, into middle class, into upper middle class, and then eventually into even the wealthy classes. This is a problem on a global level. And I think it's one that we need to start watching, because the key here is that you needed the ability for institutional grade capital and functions to be able to integrate into blockchain and crypto. This is now happening. We're seeing it. IMF, of course, now setting up a blueprint for cross-border CBDCs. This is not by chance. This has been something that has been structured. Almost it's just in unison. I feel like this was just a concerted effort moving forward. Remember, this is, again, Nick Anthony talking about this. Fully delivering the promise of benefits of CBDC, in fact, requires all money to be purely electronic and provided solely and directed by the government. In other words, it requires the end of cash, and cryptocurrencies possibly could play into this. So maybe there is something here that plays around this. Is there a bigger agenda afoot? This is the only thing. I'm always, as you guys know me, I'm not a conspiracy theorist. I'm just a person that always challenges the status quo. And it's like Occam's razor. If you think about what is the easiest route, just think about that and you'll start to catch it all. All right, guys, we're going to get to some questions for you. We will take a look at the charts as well. Let's go over to questions. Before we go there, let's go to the poll real quick and take a look. All right, so yes, banks will put him in his place. This is on Gensler. I don't know. I think maybe the banks have already put him in his place out there, in the sense of just being able to, manage it. And as you can see, Bitcoin right now, I would agree that eventually Gensler is going to probably say, hey, listen, all right, I've done my duty. I've held everybody back as long as I can. The barbarians are at the gate, but now you have the ability to fight the fight, and they will. Here's Bitcoin, of course, running out at 27.9 right now. And if you've been following our CPI data, you probably have already caught this, because it's been actually over the past 3 days where we've seen upticks on sentiment overall. Let's get to a few questions. Don't forget, by the way, guys, we always put a link down to the CPI so you can grab it there. We do it on 41 tokens. We measure top line sentiment, bottom line sentiment, which is our amplification. Not all money comes from the US. Yeah, that's for sure. And it probably more so nowadays with the fact that we've got BRICS starting to move in this direction, all that kind of stuff. Paul, should we all expect a major altcoin bleed? I think not major. Dominance is rising, and that is typically the scenario. I think it might be another scenario, guys. We may be seeing new money coming in, maybe for the first time. Because if it was coming from the crowd, you would see altcoins bleed, including some of the keys. Now, we haven't seen massive moves on this. If you think about it, Avalanche right here up to almost 3%. ADA up a lot slightly. I mean, almost everything in altcoins right now are moving. You've got Helium up almost 4, Near Protocol almost 4, a lot of green, and then here's HBAR up almost 5%. Not bad. This is on the hour chart. But the point is that this may be coming from a little bit of new money. Remember, all people need is a little bit of safety net. If they feel that safety net starting to come in, you get those crypto curious start come in. This is not a conspiracy. What are you highlighting there is the truth and actually happening. Yeah, I think you're right there, Aru. Coinbase will not get the big money. Coinbase will get crumbs. I think you're right there too, because we just explained what Talos does. So follow that crumb and you'll start to figure out where all of the real digital asset money is going to be going into from a management standpoint. Those of us sitting on dry powder, should we start buying small, stop waiting? Seem like an inevitable pullback. Okay, so that's a good question. I'll tell you what I'm doing. And obviously here, when it hit 24, we were buying again on Bitcoin, Ethereum. And I think for me, it's dollar cost. What I look for, my strategy is very simple. And it's not dollar cost averaging as it goes up. I look for these little red days, and it is, it could be a 3%, a 5%, an 8% drop. Anytime I see those, that's when I'm entering into the assets that I like. And then I have certain risk assets that I'm willing to bet and go to zero on that I think are going to have long-term plays. And we'll do a video on those so you guys kind of get an awareness around it. But what I always say is this, and you guys know this, is I've continued to put more and more of my losable assets into risk assets, meaning crypto, but I still believe Bitcoin, ETH, two number ones. I do like, as you guys know, Solana. I'm back in that camp in the sense of I feel like they've stabilized, like Avalanche and some others that we talk about in our crypto portfolio. If you're not in our mastermind, we actually share that portfolio. Jen says, yeah, I'm going crypto. I hope I'm a crypto evangelist for a lot longer than now. We've been talking about this for a while. ETH pumping, Gary's definitely doing his job. Every institution under the sun getting into Bitcoin. Y'all screaming dump. Gary just left the building. Thanks, Gary. You're on the same team for sure. Lots of good ones. Dominance isn't bull markets, and I would agree with that. This scenario I think is maybe a short-term run. We'll watch it though very closely because sentiment will start to play into this, and we're going to watch Bitcoin very closely because I think this will be the one that starts to give us market sentiment that could indicate a potential direction. Could we see it finally crack the 30K mark? That'll be the big question for sure. All right, some people buying Gala out there. Interesting, good. Any update for gaming in general? Yeah, we just did a video yesterday on Avalanche. Go watch that one. That's a big video if you follow what Avalanche is doing in Ava Labs. And then we just did one today that I think you guys are going to like. This one is kind of about gaming, but it's more about what is happening in the Web3 space as a whole. You don't want to miss that one. It's a very interesting one as well. So we'll drop it. It's on Metaverse, Web3, and probable some of the things they're doing as well. So if you guys follow me much, you kind of know where that's going. All right, last question here. I want to absolutely do nothing with institutional exchanges like Fidelity. I don't know if you're going to be able to get around it. I think the key here will be if Fidelity could be the first one that does this. The key will be if they allow inbound crypto and outbound crypto, meaning bringing money into your wallet and out of your wallet in their so-called custody system. When that occurs, I feel like we will have no choice. It will be the kind of the defunct model in which most Americans will get to these assets. Again, think of it, all right? Think of it, because what has controlled all of the United States for the last 35 years? Banking and one other thing, military-industrial complex. That's it. All right. Yes, we are going there. Render, more render. I like that one too. You guys are doing great. Thank you for all the questions today. We'll try to get to many as we can. We're doing a lot more live streams. We've got a lot of lineups for you this week. We actually have the former head of the CFTC coming on the show. I think tomorrow we're going to have that one recorded for you. Evan and I will be doing an altcoin show tomorrow. Hopefully it'll be good timing so you guys get a chance to see some things. Maybe we'll reveal some stuff there. We'll talk about that. And then we also have a lineup of hearings and some other strategies that are happening within the Bitcoin space. So don't miss this week. It's a big one right here on PBN. So make sure, jump in the Diamond Circle if you're not there already. It's an easy place to join and get a lot more additional alpha. And of course, if you want to reach me, it's out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.